Welcome to the Genus Q3 2025 market commentary. I am Ian Lusher. I'm a partner and portfolio manager here at Genus, and with me is Justin Hahn, also a partner and macro strategist with Genus. So, interesting quarter. We have a lot of questions from clients talking about hitting all-time market highs and the market perhaps being too frothy. One question I get quite frequently is how is a market like the S&P TSX, which is the Canadian broad equity market, at all-time highs when our economy is actually slow and stagnant?
Yeah, so the Canadian economy is definitely a lot slower and weaker than the US. Both the equity markets, though, the S&P 500 and the S&P TSX, are up for the quarter and the year quite significantly, but for different reasons. In Canada, the markets are up due to the mining sector as well as gold. That's a pretty big part of the TSX, and gold is up almost 50%, past 4,200. So that's contributing a lot to why the TSX is up this year.
Okay, and how about the S&P 500, which is the broad US equity market?
Yeah, the US market, the S&P 500 is a completely different story. It's mainly driven by the big AI theme and spending there, as well as forecasts for extra spending going into 2026 and 2027. So it's pricing in all the excess spending and infrastructure investments by those companies.
Okay. We're getting constantly bombarded by negative media, particularly in regards to some US economic policy. But there are some tailwinds that maybe are getting underreported. Can you go through some of the economic tailwinds in the US that are apparent?
Yeah, so there's definitely some tailwinds going into that's not being reported. The big one being the AI infrastructure spending, which is going to continue to provide a boost, as well as a lot of fiscal investment going on. The US government is continuing to spend as we go through the rest of the year. And in addition, there's a lot of personal benefits, such as the middle class income tax cuts, as well as the 100% depreciation of business assets. So again, more spending, more stimulus into the economy.
Okay, yeah, probably some of the people watching this right now are hearing some of those things for the first time. Kind of surprising, but a lot of reasons why the US market is kind of showing mixed signals. Push, pull, but there are tailwinds there that are propelling the economy. The Bank of Canada and the Fed lowered interest rates this past quarter. Where do we see the Bank of Canada and the Fed actions going forward and through to kind of mid-2026?
Yeah, so for 2026 and the rest of the year, we expect about 2 more rate cuts for sure going into this year, unless there's some big economic changes. But in 2026, it's a lot more uncertain. Canada will be at about 2% interest rates, which is around what inflation is, and US will be at about 3.5%, which is what their inflation is running at. So we expect the Bank of Canada, as well as the US Federal Reserve, to be watching the data and making adjustments accordingly.
Okay. You mentioned gold earlier. Gold's at all-time highs. Lots of clients bringing up gold and silver and other, precious metals. Can you explain to us why gold is hitting all-time highs and what the factors are behind this that's causing this surge?
Yeah, so there's a few factors on why gold is up. A big factor being that there's a lot of worries that central banks as well as the governments will have to monetize their debt. Debt to GDP ratios are over 100% in most developed nations. We recently saw a bailout from Argentina from the US, 20 billion, and there's some concerns that the UK and France might need a bailout from the IMF as well. So that, in conjunction with central banks continuing to buy gold due to the Trump administration weaponizing the US dollar, there's a lot of demand for gold right now due to all the uncertainty.
Okay, so again, it kind of comes back to debt. Too much debt in different countries and investors finding a substitute for those currencies. This is a question that we get constantly from clients, the Canadian dollar versus the US dollar. Where do we see the Canadian dollar versus US going forward, and maybe into a little bit into 2026 as well?
Yeah, so for the Canadian dollar, we expect the Canadian dollar this year to be a bit more flat to slightly positive. That's how our models view it as well. Typically, when the US Federal Reserve starts to lower their interest rates, it's better for non-USD currencies. but the Canadian economy is much slower and much weaker. So we think that the upside is a bit limited this time.
Okay. So the big question is our current positioning and where we see things going forward. How would you describe Genus, as cautious or cautiously optimistic?
Yeah, so I would describe Genus as more cautiously optimistic. Our models are more positive than we are currently. There's a lot of weakness right now with the seasonally weak period coming along, as well as we're employing more of a barbell strategy. So there are strong parts of the market, such as the AI tech side, which is more growthy, but we're also more invested in the more defensive side as well, because there are a lot of uncertainties going on.
Okay, well, thanks so much, Justin. That's a wrap for the Genus Q3 2025 market commentary. If you have any questions, make sure to reach out to your portfolio manager. Have a great day.